Welcome back. We've been hearing that there are definitive signs of recovery in the investment cycle, but would it reflect in the infra earnings this quarter? Anisha is here with the set of expectations from the sector. Anisha.
Well, yes, Q4 is generally the best quarter for infrastructure companies given execution picks up pace. Also, the order inflow momentum is expected to continue, especially as the government ordering increases in the last quarter of financial year. In terms of individual companies, I'll watch out whether Larsen & Toubro is able to meet its guidance or not. Now, the revenue guidance was 10 to 15% growth, and the company might just be able to meet the 10% growth guidance as the ask rate for Q4 is 15%, which is achievable. But the bigger concern is the order inflow guidance. The company had already reduced the order inflow guidance to 0% from a 5 to 7% earlier. But given the tall ask in Q4, we might be seeing a decline there. Moving on to IRB infrastructure, wherein the top line is expected to increase by 35 to 40%, led by the construction segment revenue. Now, while the new projects do add to the top line, they also add to the interest and depreciation, and that is why bottom line might be under a bit of pressure. Moving on to Power Grid, wherein the capitalization rate in the Q4 has been the lowest, but the revenue would be driven by the strong capitalization that we saw in Q3. So expect the earnings momentum to continue in Power Grid this quarter as well.
Okay, thanks, Anisha. Will you touch capital goods, Gautam, big or small?
Nope, not yet. Too early.
Rakesh?
L&T has corrected quite a bit, and the key variable to watch out would be domestic revenue growth. If that shows signs of pickup, I think L&T could definitely be a candidate to be bought at current levels. Okay. Secondly, Power Grid also, is likely to have a very strong quarter. The stock has done nothing, and interest rates are coming down. It's a proxy on interest rate play also. So L&T and Power Grid, can be picked up at the current levels.
Okay, fair enough. Let's move on then. One of the sectors of the last few weeks has been metals, though they've reported weak earnings, but the market might be looking ahead already. But for this quarter, is there any respite in store? Varendra will tell us more about the companies that we'll be watching out for.
Well, no major hopes in the metal sector if you have to compare Y and Y. But quarter on quarter, things might be improving, especially the volumes for the entire metal sector. The volume growth expectation in the street is that it could be above 10%, which is the highest in the last 8 quarters. And if you're watching out for the prices, there was a continuous downtrend since third quarter of FY15, and the domestic prices have moved up by nearly 15% since Feb 2016 after that MIP imposition happening in. But on a quarter-on-quarter basis, the prices are still flat. The rate of EBITDA decline could also reduce substantially for some of the companies. If you're watching out for particular companies, people are hoping and believing that the aluminium companies like Hindalco and Nalco could post good results, so watch out for them. There could be a bit margin expansion quarter-on-quarter basis. Tata Steel and SAIL could continue to report PAT losses despite marginal rise in steel prices and volume leverage. Expect Coal India revenue to grow by nearly 3%, led by 6% growth in offtake volumes, partly offset by 3% dip in the average realization. So not great hopes, but still, quarter-on-quarter, the volumes pickup will be there for the metal sector.
Okay, well, cement ran up. So before I go to my guest, Mangalam, why don't you tell us how will the performance, will it match up to the price move?
So two things to watch out for the cement companies in the fourth quarter. First one, volume growth, and secondly, realizations. As far as volume growth is concerned, we have the base advantage as well, because in the fourth quarter of the last fiscal, cement volumes declined by 5.8%. And now we're also seeing some demand recovery or green shoots of demand recovery as far as the managements that we've spoken to as well. So the street is estimating cement volume growth of double digit in the fourth quarter. Citi, for instance, expects volume growth of 11% coming in for Ultratech, 28% for Shree Cement, and ACC and Ambuja are likely to post volume growths of 7 to 8% itself. As far as realizations are concerned, now cement prices have been on an uptrend since February. However, realizations for this quarter are not likely to beat those of third quarter itself. So by and large, EBITDA per ton is likely to remain flattish quarter on quarter, or at worst be marginally lower than the ones that we saw in the last quarter itself. Finally, keep an eye out on all these mid-cap cement companies like JK Lakshmi as well as Dalmia Bharat. Both of them are expected to report a good set of numbers in this quarter itself. So volume growth, realizations, and mid-cap cement companies are the three things to watch out for in this quarter.
Okay. Rakesh, you track both these spaces very closely, metals and cement. We have had a big rally in both these sectors. pricing in the earnings growth, or do you think the companies could still surprise?
See, both the sectors are pricing in more than what they can deliver. And I think the rally has been too sharp. I mean, it all depends on China right now as to whether the commodity prices sustain where they are. But looking at the oversupply in most of these commodities, it is just a matter of time before production actually picks up and overwhelms the demand again. So I would be very careful, investing into both metals and cement at current valuations. I don't think this euphoria is justified. The only stocks probably which look reasonably okay, one is Coal India, other is Hindustan Zinc, and third is, say, probably Jindal Steel and Power. Apart from all these three, many others are looking pretty expensive.
And your take, Gautam, do you find value in cement after the rally?
Rakesh.
Sorry.
Not very different from Rakesh. I would tend to agree. Metals is very China dependent. And cement, while this quarter should be strong, again, if I look at top-down the FY17 estimates, earnings growth estimates, that seems way too optimistic. So I think after the rally, a lot of this could be getting priced in very, very quickly.
Okay, last question then to both Gautam and Rakesh. Gautam, I'll start with you first. Post this earnings season, do you think market will get more good news than bad news?
So it's a question of good news, bad news, and what's already priced in. So in terms of catalyst, obviously the budget session will be relevant. Rural matters a lot more. Monsoon matters a lot more for sentiment, and we have to see what happens globally. So in our view, in terms of markets, what they're pricing in, a reasonable recovery from a near-term perspective is definitely priced in for the market. The longer-term story still remains intact.
Okay, you're not in the 8,100 camp?
Short term, no one knows, but that's kind of an upside scenario for us rather than the base case.
Rakesh, your year in Nifty?
So we are still at 9,200, which looks very far. But, come GST and bankruptcy bill, and maybe some sensible announcement by US Fed, we should reach there by December.
Oh yes, come GST and bankruptcy and the rains as well. Perhaps a V-shaped recovery can't be ruled out. We've put behind us a very happy trading day and a trading week. So perhaps it's time for good news and time to factor in more good news. Thank you very much, Gautam, Rakesh and Team Research for giving us a peep into how the earnings season might pan out. If it indeed pans out better than the numbers you all put out, perhaps this rally will have more legs. Otherwise, maybe it will be sell in May and go away. We'll wait and see. Thank you very much for joining us in this special quarter se quarter tak coverage.